Good morning, everyone, and thank you for joining us for this technical session about Auditors Adjustments. The idea of our session is just to take out the fear or mystery factor from the Auditors Adjustments so we can all feel comfortable with understanding and making them. Okay, so let's start with the presentation. Okay, so every time the auditors work on our records, they're going to make adjustments. Now, if our records are really clean, there is barely any adjustments to make for them, they're still going to find one or two. That's normally what happens. And it is true that the more adjustments they make, the more of an indication it is that our records aren't clean, right? So if we're starting to work on our year end, it's a good idea to get a copy of the auditor's adjustments from last year, kind of review them, go through to just get an idea, okay, what went wrong, what they had to adjust, and can we focus on it a little more this year. And say if you're sitting on some sort of a board of directors or committee and somebody is presenting an audit, by the number of adjustments that the auditors made, you can understand how clean the records are of that organization. Okay, so our goal for our organizations is the least amount of auditors adjustments, but the ones that they make, it's good for us to understand. Okay. So the way auditors work is they take a copy of our records, normally an electronic copy, and then they take our trial balance, which, if you remember, that's a list of all our accounts, all the accounts and categories with balances at the year end, and they input the trial balance into their own software. So most auditors use Caseware, it's just auditing and financial statement software. So that trial balance that they take from us, that's their starting point. As they do the audit work, they may find adjustments. If they test the balance and they say, okay, this is incorrect, this has to be fixed, they make adjustments in their software. So in Caseware, they don't touch our software during the audit, or at least most of them work this way because they're supposed to be independent of our records and do the work in their own system. So at the end of the audit, once they've made all the adjustments, if there is good communication with them, they may go through the adjustments with us and say, okay, look, we had to adjust this and that. For the majority of organizations, they normally just send a copy of the audit adjustments along with the adjusted trial balance. So the trial balance from Caseware, from their system, a list of all our accounts, they'll send it to us. Now, when we receive it, it's very important that we make the adjustments in our system, because for our numbers to be correct for the year, they have to agree to the annual audit, right? And what happens if they don't agree? Well, when we start preparing for our next year end, really most of our balances aren't correct because we're not starting from the correct opening numbers, right? Our last year's numbers don't agree to the audit. So whatever work we do on the current year end is meaningless because we're not starting from correct numbers, okay? So very important to make those adjustments. Now, for some of us, it's a pretty clear process. We get the adjustments, we make them in the system, right? Then another step that I always recommend is once you've made the auditor's adjustments, lock your system, lock that year. Most software have the capability of locking the system down. So once you've made the adjustments, lock that year, because what happens if sometimes later somebody makes an entry and dates it within the audited year that was already audited, now all my opening numbers are off again. So we want to prevent people from posting to the year that's already been audited and that agrees to the audit in our system. Okay, like we said, fewer audit adjustments means higher quality records and lower audit costs. So again, when you're preparing for the current year end, take the time to review audit adjustments from last year and see if there is anything we can do internally so the auditors don't have to make the same adjustments again. Okay, now for the ones of you that attended the year-end preparation checklist webinar, the first item on the checklist is make sure that last year's numbers agree to last year's audit, right? Very important. And that is achieved by making sure those auditors adjustments are made in our system. And that in the end, once the adjustments are made, the numbers in our systems completely agree to the audit, okay? Now, what can happen is we send our records to the auditors for a certain year, right? They do the work, they prepare audit adjustments, they send them back, we post them, but somehow our records still don't agree to the audit, right? Excuse me. So when that happens, normally what that means is between the time we send our records to the auditors and then sending back the adjustments, somebody was posting into those records in our system, right? So if I send the records to the auditors and at that time my net surplus was $10,000, and all of a sudden once I get back the auditor's adjustments, my net surplus is showing as $5,000. That means somebody posted something within our records while the auditors were doing the audit, and the auditors didn't have that in theirs, because once they take our records, that's what they work on. They don't ask us, hey, are you posting something else in your records? So another important step, once we send the records to the auditors, make sure nothing is posted to that year. Otherwise, we're gonna spend a lot of time trying to match the year to the audit. Okay, so let's look at examples here of case where trial balance and adjusted journal entries. The auditor's adjustments are referred to as adjusted journal entries. Okay, so this is, I'm using Child and Family Services Agency as an example here. And this is a case for trial balance. Very typical look. So when you get it from your auditors, it should look familiar after you look at this, okay? And so you'll see what happens here. Like as any trial balance, this is a list of all the accounts for this organization. Okay, all the accounts are listed here with the balances. Okay, now how the auditor's trial balance works is first column is the preliminary numbers. Those are the numbers they got from our system, right? So once they get those numbers from our system, remember, we can't post anything else into our system. Otherwise, we're going to have differences and spend a lot of time trying to adjust. Okay, so those are numbers from our system. Adjustments here, second column, those are the adjustments the auditors make. So all those adjusted journal entries are going to be shown here. So for instance, you can see for this organization, investment account starts from 7.4 million, and then the auditors recorded an adjustment of 382,000. So the ending balance in the audit is going to be the preliminary plus the adjustment, 7.8 million. Okay, so then preliminary is our numbers, adjustments are auditors' adjustments. You'll see a third column here, it's called reclass. So those are reclassifying journal entries. We don't need to worry about them because they're just for presentation purposes. So if in the audit, they have to show something in a certain way based on accounting standards, they're going to use this column. There's not going to be much here normally. So when we see it, we don't worry about the reclass column. So, and then here where it says rep, probably for representative numbers. I'm not even sure what it means, the rep, but these are the final numbers for this year, for March 31st, 2021. So these numbers in the fourth column, in the rep column, this is what we should have in our accounting software for 2021, for that audited year, after we've posted audit adjustments. Okay, now if we follow the process, if once we send the numbers to the auditors, nobody made any entries to that year, then once we post the auditors adjustments, we will agree, right, to their final numbers. And once we agree to their final numbers, we lock the system down, because we just don't want any chances of somebody posting something to that year, and then we spend hours and days trying to figure out how to agree to the auditor's numbers. Now, if we're not the ones that are going to spend hours and days agreeing to the auditor's numbers, the auditors are going to do that for us, and they're going to charge for it, right? So if we do have the skills to reconcile to the audit, to make sure our records agree to the audit, we should do it internally. And now you'll see here the last column is just the previous year, is the March 31st, 2020. It's normally not really useful to us when we're dealing with the current year's adjustment. Another thing to note is at the bottom of the auditor's trial balance, just go to the bottom, it's a long one. Give me a second here. You'll see the net income or loss for the year, right? That's our surplus or deficit. And this number is kind of important, because one of the ways, the easiest ways to check that my records internally agree to the auditors is I look at my income for last year. So if I'm preparing for the 2022 audit right now, I'm going to go into the 2021 year. I'm going to check my net income, and I'll expect it to agree to this number that the auditors show. If it agrees, I'm golden. Everything probably agrees. If it doesn't agree, this is when I start doing the work to agree, okay? Another thing that's a little different about the auditor's trial balance, so for the ones of you that use trial balance in accounting system, you know that most of them would be like two columns. So one column would be for the debit balances, which are positive balances in here, and the second column would be for credit balances. So it would look a little different, right? Now for the auditors, because they have so many columns here, they combine the trial balance all in one column, right? So the rep column here, the last column of the audited numbers, all the positive numbers are debits, all the negative numbers are credits. So in your own system, it may look like all the positive numbers are in the first columns and all the negative numbers are in the second column. Okay, just something to keep in mind. So this is the trial balance. Now let's look at the adjustments, what they look like. So auditors' adjustments are basically journal entries, right? Like for the ones of us that aren't very comfortable with journal entries, that is fine, because really what they do is they spell it out for us completely. So we look at the first journal entry here. They have an account to post it to, so accounts receivable INAC, and then the second account, deferred revenue INAC, right? And then they have a description of what they're doing here and the amounts, right? So even if we're not comfortable with making journal entries in the system, all we need to know is how to post them. All we need to know is the functionality, and then we go in and we repeat exactly the journal entries as posted by the auditor. Okay, now we don't have to use their descriptions because maybe they're too long to post in our system. All we have to do is say AJE 1 2021 audit, right? The first journal entry from the previous audit. For some of us, it's easier to post all these entries in one entry. So instead of here is entry number 1, here's entry number 2, here's entry number 3, you may want to combine them all into one entry. Just make sure the debits and credits are, you know, in the right direction there, right? And it depends how many entries the auditor has. So here they have quite a few entries, so I'd probably post them separately, but sometimes you just have 2 or 3 entries and you combine all of them in one. It all works, whatever is the easiest for you, for as long as we achieve the result of our records for 2021, in this case, agreed to the auditor's records, the auditor's trial balance. So now, once I posted those journal entries in my system, how do I make sure that I did right? Well, all I have to do is go to my 2021 bottom line, so my surplus or deficit or my net income or loss, and compare it to the auditors, right? You see at the bottom here, net income loss. So once I posted everything in my system, my net income or loss should agree to the auditors, and it's conveniently presented underneath the journal entries as well. Okay, so hopefully this is pretty straightforward, and when you see auditor's trial balance and adjusted entries, you'll know what it is and how to read it. So now, what happens? Let's stop sharing this here for a second. So what happens if we compare the net income and it doesn't agree, right? What happens if we look at our net income for last year, compare it to the auditors, and it doesn't agree? Well, clearly something went wrong, right? So what do we do then? Well, first of all, we check if last year's adjusted journal entries from the auditor were posted in our system, right? Then we can check if they were posted correctly. So if they were posted, were they posted correctly, right? Because sometimes we delegate that to somebody within our organization, and if we didn't have a chance to check, well, maybe they forgot to post an entry, or maybe they posted them incorrectly. So that's the first thing we do, is we check that the entries were actually posted, and we check that they were posted with correct amounts and to correct accounts, right? So we check all that posted. Now, what happens if we check the entries were posted, all the amounts are correct, but our net income, our bottom line, still doesn't agree to the auditors, right, for that last year? Well, what that means is somebody made entries, somebody posted something into that year after auditors already took the records. And the way to fix it right now is the long way, okay? So what's a long way? Well, we have to compare every balance on our trial balance to balance on the auditor's trial balance and see if there is a difference. Then after we find all those differences, this is when we make a general journal entry in our system for the differences to eliminate them. Okay, so let's look at an example here. Okay, so I'm going to start with sharing a Sage 300 trial balance. So the same, that's a Child and Family Services agency. So like I said earlier, trial balances from majority of our systems would have 2 columns, right? So we have debits and we have credits, and it can look pretty long, depends on how many accounts we have, right? But then majority of trial balances, if you're on Sage 300, they would show you the bottom line here, right? You would know your net income or loss. If your system, if you're on Sage 50 or in QuickBooks and your system doesn't show you the bottom line on a trial balance, just go to your income statement for last year to check what your bottom line is. So in this case, this was one of the reiteration of trial balances I got from this Child and Family Services. You can see here my net income is 1.348 million. Okay, so the first thing I would do is I'd go and check that against what the auditor shows as net income. And his is at the bottom of adjustment journal entries, or I can look at the bottom of their trial balance, is 1.359, right? So clearly there is a difference of $11,000, which for this organization is not a huge difference. It started with a bigger one, but any difference we have to address. There is no other way. So I see that difference. First thing I do is I go check that adjustment journal entries were posted correctly. If yes, then now I have no choice. If I do it the hard way, I have to compare trial balances to see where the difference is. Okay, so let's look what that means. Okay, so here's the example. This is the same client, different reiteration of the trial balance. So they have the unfortunate history of people posting stuff into last year multiple times, even after we adjust for the audit, and somebody forgets to lock it, and then we have to do the same thing over again. Now, fortunately, people that work there are pretty good with Excel. So, making these calculations, if you're good with Excel, is easier, it takes faster, right? But they're an example of what not to do. How system doesn't get locked, people keep posting stuff into last year, because it happens. You get a bill that's dated last year, even if it's a tiny bill, you post it with a bill date, but oops, now your audit doesn't agree again, like your records don't agree to the audit. Okay, so what do we do here? Well, my first column is the audited trial balance, right? You'll see that right at the bottom here, my net income agrees to the auditors. Now, because we put the trial balance in one column here, and this is just to make it easier because the auditor's trial balance is in one column. Remember how they have debits as positive numbers and credits as negative numbers. And then at the end, your trial balances, right? Which means the total of all positive and negative numbers is 0, right? Total of all the accounts. So then I put the audited trial balance is my first column. My next column is my trial balance in the records in my Sage 300, my internal trial balance. And then I calculate the difference. Again, if you know how to use Excel efficiently, this is going to be a quicker process because then you just do a formula here, right? Formula is the audited number minus our internal number, and this calculates the differences. So in the end, what we're trying to get is a difference column that balances to 0 as well, right? Because that's going to be our journal entry. And our audited trial balance, if we enter it correctly, it balances to 0, right? Because that's the nature of a trial balance. All the debits and credits balance to 0. And then so is our internal one. And then so is the difference. Okay. Now, this is for a trial balance that's long like this, it's a lot of work to try and enter something into Excel if you want to be efficient. So what you can do is ask your auditor for an Excel trial balance. Most of them have capability of exporting from Caseware, which is their software, to Excel, and then sending this to you straight in Excel. So then you don't have to work too hard. You also have the capability of exporting from Sage 300, Sage 50, QuickBooks, and any other software you work with. Most of them have the capability of exporting to Excel. Okay, so once you export to Excel, the only thing you have to do is put it all in one column, right? So remember how in our software, it's always 2 columns, first debits and credit. So to compare to the auditor's numbers efficiently here, I need it all in one column. So all the credits are gonna go as a minus in here. If you're familiar with Excel really well, you can do a formula and do it very quickly. Otherwise, you'd have to just, go through and combine the numbers. And it's always a good idea, if you're not familiar with Excel, to take some training. Excel is a great tool for accountants and most of us. Also, it's good to ask for help. If you have somebody at the office who may be really good with Excel, they could probably do this for you in 10 minutes instead of you spending an hour combining the trial balance into one column. Okay, so the idea is simple, but it can be time consuming. So audit the trial balance in one column compared to our internal trial balance in one column to calculate the differences, what accounts have differences. So you'll see for this client, there was a huge difference in accounts receivable INAC. And how did that happen? Well, once they sent the records to the auditor, somebody was still posting receivables in their system, which unfortunately is not uncommon. Okay, so once we calculated all the differences and we made sure that in the end, the total of my differences, balances, just like my trial balances when put into one column, right? Then what I do is I hide all the rows that don't have differences and just keep the differences to produce something like this. So I have account number and description and the difference, right? And then this is what I'm going to post as a journal entry in my system. And after I post it, my records would agree to the audit. Just because these are my differences from the audit, I post it, I agree to the audit, if that makes sense. Okay. So I think the main takeaway from here, except for knowing how to read Auditors Adjustments, is it's important to lock your system if you can, or at least make sure in some other way nobody makes any adjustments in the system once you send the records to the auditors, right? Sometimes the auditors can help you with locking down the system. If they physically come to your office to take your records, maybe ask them to lock down that year right when they're there, so nobody can post anything in there. Now, once we receive the auditor's adjustment, hopefully our system allows us to unlock that year, post the adjustments, and lock it back. If our system doesn't allow us to lock and unlock multiple times, we may have to keep it unlocked until we post the final adjustments and lock it after that. But we have to be very diligent that no one posts anything to that year. Otherwise, you're going to be in that exercise that I just showed, which can take hours or days if you're not using Excel, comparing trial balance to the auditors and posting the differences. Okay, now if you feel that this is overwhelming just because you have other stuff on the go, there is nothing wrong with leaving that to the auditors, but keep in mind the timing and the cost of the audit will be affected. They'll charge for it and they'll spend more time doing the audit. Okay. So I think we did all this. But another thing to note, there are systems like Sage 50 that if you pass the year end a certain number of months, it automatically gets locked down, so you can't post anything into that year anymore. If that's the case, you may need help from your auditors to adjust, because really you'll have, instead of adjusting in last year, you'll have to be adjusting in this year. So instead of posting to income statement accounts, revenue and expenses, all that would have to go to retained earnings. And if what I'm saying is, sounds very unfamiliar and technical, then this is the time, if your system is locked down, you can't post the adjustment anymore, this is the time when you do have to leave it for the auditors to post those adjustments. Okay, thank you for your time. That was technical, but quick.